Hello everyone and welcome to Evan's Value Exploration channel. In today's video, we dive deep into the critical question: how did NVIDIA reach its tipping point? For the savvy investor, spotting the signs before the wild surge could have made all the difference. If you're new to the world of AI and NVIDIA, we recommend starting with our beginner-friendly series to build a strong foundation. But for our well-informed viewers, get ready for an incisive financial journey as we meticulously analyze the early indicators that signaled NVIDIA's remarkable ascent. Prior to NVIDIA's stock price skyrocketing, there were two crucial financial reports that warrant a closer look. By meticulously analyzing these reports, we can uncover the key indicators that signaled the company's performance explosion. The first report of interest is the fiscal year 2023 annual report, which was released in January 2023. The second is the fiscal year 2024 Q1 financial report, published in May 2023. A quick glance at the stock price chart reveals the significance of these two milestone moments. We will perform a comprehensive analysis focusing on several key aspects: corporate stock repurchases, fluctuations in working capital and their correlation with market supply and demand dynamics, capital expenditures alongside research and development investments, and the evolution of revenue and gross margin. Let's take a closer look at NVIDIA's financial statements for fiscal year 2023, which ended in January 2023. There are a few significant changes that stand out. In fiscal year 2023, NVIDIA's share repurchase amount soared to an astonishing $11 billion, marking the highest level in nearly 8 years. Such a substantial buyback program is often a strong indication that the company holds a bullish outlook on its future prospects. When a company repurchases its own shares on such a massive scale, maybe something is happening. Fluctuations in working capital provide valuable insights into the supply and demand state of the market. In fiscal year 2023, NVIDIA's inventory levels surged from $2.605 billion in the previous year to a staggering $5.159 billion. Sometimes, increased inventory levels might not be a positive indicator, but when you consider the company's massive share buyback program and large-scale data centers required for the development of ChatGPT-like software, it could tell a different story. Conversely, the company's accounts receivable experienced a notable reduction of $822 million during the same period. This decrease indicates that NVIDIA has been successful in collecting payments from its clients, thereby enhancing its cash flow and liquidity position. Furthermore, the balance of prepayments and other current assets in fiscal year 2023 skyrocketed to $791 million, representing an astonishing increase of $425 million compared to the $366 million recorded at the end of fiscal year 2022. This 116% surge underscores NVIDIA's proactive approach in securing critical components and resources from its suppliers, as it anticipates a substantial ramp-up in production to satisfy the burgeoning demand for its products. As of January 29, 2023, NVIDIA had prepaid supply agreements amounting to $2,989 million, compared to $1,747 million as of January 30, 2023-2022. This indicates a significant increase in prepayments for supply agreements over the year. These working capital trends paint a vivid picture of the supply and demand forces at play within NVIDIA's ecosystem. The company's strategic maneuvers in managing its inventory, receivables, and prepayments demonstrate its ability to adapt swiftly to the evolving market landscape and position itself for sustained growth in the face of expanding opportunities in the AI and gaming sectors. NVIDIA's capital expenditure, fixed assets, and R&D expenses soar in fiscal year 2023. NVIDIA's financial statements reveal significant investments in growth and innovation for the fiscal year 2023. According to the company's consolidated statements of cash flows, capital expenditures reached $1.833 billion in fiscal 2023, a staggering 88% increase from the $976 million spent in fiscal 2022. The company's commitment to expanding its infrastructure is further evident in the growth of its fixed assets. As of January 29, 2023, NVIDIA's net fixed assets stood at $3.807 billion, a 37% increase from the $2.778 billion reported on January 29th. NVIDIA's dedication to research and development has also reached new heights. In fiscal 2023, the company's R&D expenses soared to $7.3 billion, marking a 39% year-over-year increase, the highest in recent years. This substantial investment in R&D underscores NVIDIA's commitment to driving innovation and maintaining its leadership position in the graphics processing and artificial intelligence markets. These financial metrics demonstrate NVIDIA's strong focus on long-term growth, as the company continues to invest heavily in its infrastructure, assets, and research capabilities to support future product development and market expansion. Let's examine the Q1 financial report for fiscal year 2024. The company has presented a highly optimistic financial outlook. They project Q2 revenue to reach approximately $11 billion, marking an impressive 50% year-over-year growth. Even more remarkably, the gross margin has skyrocketed from 43.4% to 68.6%. This simultaneous increase in both revenue and gross margin demonstrates a rare combination of volume and price growth, exemplifying what can only be described as perfect acceleration in the company's financial performance. Let's recap the key points. 1. Stock repurchases have reached an 8-year high of approximately $11 billion. This substantial buyback of the company's own shares may reflect management's strong confidence in NVIDIA's future. Such a significant repurchase program not only bolsters market confidence, but also enhances earnings per share, providing upward momentum for the stock price. 2. Analysis of working capital changes reveals insights into supply and demand dynamics. A substantial increase in inventory coupled with decreased accounts receivable indicates robust demand and prompt payments from downstream customers. Concurrently, increased prepayments suggest optimistic growth projections. 3. Research and development expenses have accelerated to a multi-year high, signaling the company's intensified focus on frontier technologies such as artificial intelligence. The commercialization of these innovations is poised to unlock new growth trajectories for NVIDIA. 4. Significant growth in capital expenditure and fixed assets demonstrates NVIDIA's aggressive capacity expansion, positioning the company to capitalize on emerging opportunities in the artificial intelligence era. 5. From a forward-looking perspective, the simultaneous rise in both revenue and gross margin, coupled with surging market demand and strong pricing power, represents a perfect acceleration scenario for the company. Analyzing NVIDIA's case study, we can distill several key strategies for identifying inflection points in tech stock growth. 1. Event-driven catalysts like ChatGPT. Connect the dots between AI advancements and potential surges in data center computing demand. Employ a hypothesis-driven approach, seeking concrete evidence to validate assumptions. 2. Supply-demand dynamics. Scrutinize changes in working capital as a signal of shifting market conditions. 3. Innovation and expansion indicators. Monitor R&D investments and capital expenditures to assess the company's technological edge and capacity growth intentions. 4. Financial quality metrics. Focus on revenue growth and gross margin trends. These twin pillars are crucial in evaluating growth quality. Revenue growth reflects market penetration and product competitiveness. Gross margin indicates pricing power and cost management efficiency. NVIDIA's stellar performance in both areas, rapid revenue expansion coupled with margin improvements, demonstrates a formidable competitive moat. This ability to scale quickly while maintaining profitability justifies premium market valuations. 5. Management sentiment and actions. Evaluate leadership's outlook on company prospects and analyze stock buyback patterns as potential indicators of internal confidence. In essence, NVIDIA's success story offers a masterclass in identifying high-growth potential in tech stocks. By looking beyond surface-level financials to uncover underlying business dynamics, investors can spot pivotal growth inflection points. If you found this content interesting, we invite you to subscribe for more. Your time and attention are truly appreciated. Thank you for being with us.